Blockchain was supposed to be the financial revolution, so why are investors scrambling for the exit? Alright, let's get real about decentralized finance, where dreams, hype, and cold, hard reality collide. Today I'm breaking down what's really happening in DeFi: the good, the bad, and the bubble that might be bursting as we speak. First, quick refresher. What DeFi anyway? It's all about making finance open to everyone. No banks, no paperwork, no gatekeepers, just code, smart contracts, and the promise that anybody, anywhere can trade, lend, or borrow money with just a phone and an internet connection. Sounds like magic, right? Well, sometimes magic has a few bugs. Here's the deal. DeFi uses smart contracts, basically programs that automatically execute transactions if certain conditions are met. You've got decentralized exchanges, lending protocols, stablecoins, all these innovations trying to cut out the middleman. In theory, that means more freedom and better returns for you. But in practice, well, let's talk about that. Picture this. You're at a friend's party. Someone corners you by the snacks and pitches their next big DeFi project. No risk, guaranteed returns, freedom from banks. 2 months later, you're checking your wallet, and your investment has nosedived. Suddenly you're Googling what is a rug pull and wishing you just stuck to the chips and dip. Yeah, I've been there. DeFi exploded onto the scene, promising to democratize finance for everyone, everywhere. Billions of dollars started flowing into these platforms almost overnight. The headlines made it look unstoppable. But here's the other side: volatility, scalability headaches, and let's be honest, some seriously clever hackers. Last year alone, over $3 billion vanished thanks to DeFi hacks. That's not just an oopsie, it's a massive warning sign. If you're thinking about putting your savings into a protocol, you'd better understand the risks, because the safety net is, well, not really there. But let's be fair. DeFi isn't just smoke and mirrors. There are real-world use cases making a difference. Farmers in Kenya are using DeFi loans to grow their businesses without falling victim to predatory lenders. Supply chains are getting more transparent and efficient. For folks locked out of the traditional system, these tools can be a game changer. But, and this is a big but, navigating the risks requires real know-how, not just hype. So, where does DeFi go from here? There's a push for better interoperability, making different blockchains play nice together. Plus, regulators are starting to take this space seriously. Traditional banks? They're watching closely, ready to borrow the best bits and leave the mess behind. DeFi's not disappearing, but whether it actually changes the world depends on fixing its biggest flaws: security, scalability, and, yeah, a bit of trust. Could this tech be the backbone of a more inclusive global system? Maybe. But first, it needs a serious reality check. What about you? Are you still bullish on DeFi, or do you think the hype has peaked? Drop your thoughts in the comments. I read every single one. If you learned something new today, hit that like button and join the channel for more deep dives into finance and tech. And seriously, share this with that one friend who thinks crypto is a shortcut to Lamborghiniville. Next week, we're going even deeper. The biggest DeFi controversy yet: how blockchain technology might be sabotaging itself from the inside. You do want to miss it. See you then.